Hello, let's see if this thing works. As usual. Let me just wait. Okay. So, hello guys. Good morning. If everything is working, let me know so we can start. Test, 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 test. I think it should be working well, but just want to make sure. Great. Okay, I think you guys hear me. Perfect. So, we have a lot to cover today. And let's go with the Web3 updates. Good morning, Mr. IDK. Let's go with the Web3 updates. Okay, so I went to one of the conferences in Asia. Stopped going to conferences that often. And I do remember how amazing it was back in 2017, my first consensus. And then Ethereum was also 2017. 2018 was a little bit slow. I was still going and attending a bunch of events. 2019, my God, that was very busy. Ethereum was exciting. Consensus was exciting. 2020, the appearance of DeFi. The DeFi term was just coined. It was just created. And I remember I was speaking at that point of time, I think with the CEO of OKX, or somebody who then became a CEO of OKX. And the title of the panel was in one of the top universities actually. And the title of the panel was DeFi, decentralized finance. I remember what I said. I said that, DeFi is overrated. That's what I said. As far as it's great to have all the mechanics, because MakerDAO was already live for years before. Like, why would we need to create another term, DeFi? Like, why? What's the point? That was they were my comments. Then 2020, that was a little bit of the disease. Up until 2021, there was some slowdown, and then magically things started coming back. And the conferences became way more boring. That's my feedback. Like, absolutely fucking boring. And I have an explanation. I did share with the whales what I think. So, those of you guys who didn't check it, goes like this. Let me actually find it in Ghost Whales. So there was a discussion regarding layer 2's rollups, which is Arbitrum, Optimism, etc. Kind of hijacking Ethereum, trying to get liquidity out of Ethereum. Ethereum has to, for some reason, has to follow the lead and actually try to minimize the fees, although that's not needed. But okay, fine. And then kind of that's a little bit hurting Ethereum because the stakers receive less rewards. So then the stakers would rotate out of Ethereum and into something more profitable, say Bitcoin. Uniswap and some other dexes, like especially Curve-based dexes, like SushiSwap, Curve itself, etc., could potentially be approached by SEC for whatever reason. DAI, that was a huge surprise to all of us. Well, okay, first of all, when they started being backed by Circle, by USDC partially, that was already what the fuck type of moment. Now, with this whole situation, now the wallets could be frozen. What's that? That's interesting. So we see that ETH as one of the leaders of the decentralization 2.0 getting hijacked. Uniswap, that's potentially 3.0, getting pursued by the regulators, probably unsuccessfully, but still very inconvenient for them. MakerDAO, for no reason, getting themselves re-domiciled out of the decentralized and into like potentially more centralized, right? So what's going on? And you see that same trend happening on conferences. 2017, what was in the air? Lots of Bitcoin miners, lots of use cases. Back then, we wanted to disrupt the legal system. We wanted to disrupt the supply chain. Yeah, there was some different projects like Hyperledger, which was also centralized, but even they have been debating with Ethereum Alliance. So they were not in isolation, staying there and just essentially pitching. It was always Hyperledger versus somebody else. It was always versus Ethereum Alliance, or it was even R3 with Corda, was trying to do some B2B enterprise stuff. Let's, unite the banks and disrupt the banks. So everybody wanted to disrupt everything. Supply chain, finance, legal, voting was a huge one. Huge, absolutely huge. There was this project that wanted to disrupt voting, how we vote, like on-chain voting. Not governance voting for the DAOs, but like actual voting to elect presidents. So that was a very, very, very serious project. I personally know the founders. What do we have today? What do we have on the conferences today? Fucking meme coins, Web3 gaming with cats, of course. Cats and sometimes dogs, but mostly cats. And, some Dpin. No offense to you guys who invested in Dpins. If anybody, Dpin, abortions, absolute abortions. And that leads me to believe that while in 2017 we really went after the user, we really went, as a Web3 community, we really went after actual adoption. Now, these projects they don't care about the users, like absolutely zero respect to the user, nothing. It's all about let's impress VCs. One project in particular, maybe I mentioned it in the whales. Dpin. So Dpin is what? Decentralized something like infrastructure. Essentially, it's like hardware. So you split, you distribute hardware. And there are some potentially interesting use cases. Let's assume create decentralized AI computing services, which makes no fucking sense because centralized computing services will beat you left and right because they're just so much more efficient. There's no latency, etc. But okay, whatever. They can promise all this fugazi to the investors, I guess. But let me talk about this other Dpin. So Dpin, which is a fucking vapor. A vapor. So you vape. So the slogan goes like this: breathe to earn. But it's BS because in reality it's smoke to earn. So what you do, you buy a vapor for $40, and then it has a certain number of puffs, and you smoke those puffs and you earn points or tokens, whatever you earn. And then after those puffs are out, you can still use the vapor. But if you want to keep earning the points, you need to buy another vapor. The business model is, we're going to sell so many vapes or vapors, whatever they are. But no, that's not good. We don't want that. We don't want people to smoke. So we create a healthy version where people inhale oxygen through the similar vapor, whatever, and they can consume vitamin C. That's a healthy version. And then I'm asking the guy, but in reality, you guys are really going after nicotine. You're really going after the smokers. He's like, absolutely yes. I'm like, that's so clever. You guys got to disrupt the smoking markets. He's like, absolutely clear. How much money did you guys raise? $30 million, but we could have raised more. That's nothing. That's not much. 30 million, just not, My question is this: what's the adoption? Like, how does people like trying to disrupt the smoking industry? Do they know that the tobacco industries will just break their fucking legs and kill them? Like, what are they thinking? Like, and investors, what do they think? And I know what investors are thinking. They're thinking that's a cool freaking idea. We invest $30 million. We'll attract lots of retail users and we'll dump all this equity, all this stuff, whatever tokens on them. Like that's a typical model. Very profitable. But what about the user? What about the user? Nobody fucking cares anymore. So yes, very aggravating. to see these nonsensical use cases. Nobody is really trying to disrupt anything anymore. They're just trying to disrupt the wallets of VCs positively, because they themselves as founders will end up probably with nothing as well, not even track record or experience. So what we've been saying in the whales regarding the Web 2.5 revolution taking over and really not like really preventing Web 3 from moving forward, every single year conferences become worse and worse and worse and worse. Absolutely fucking worse. So if you guys attending some conferences, would love to hear your feedback as well, now or in the whales. But that's what I'm saying, and that's pretty depressing. And of course, what we need to do is keep fighting. Here's the thing: it's not going to be a losing fight; it's going to be a winning fight. So how will that work? Is at some point of time, the regulations, like at some point of time, regulators, controlled by the government, will realize what VCs are doing, and they will try to get the cut, and they will start doing over-regulation. That's what they're doing with MiCA in Europe. That's what they're trying to do with the SEC FINRA in the US. So certain markets will be cut out from operating by the Web 2.5s. But, like, for example, if you're Web 2.5, you don't want to go to the US. You don't want to go to China. You don't want to go to Europe. If you're Web 3, you can operate anywhere you want. That's the whole beauty of it. So what's going to happen is these over-regulations will start triggering Web 2.5 fivers to go to essentially fewer and fewer economies, fewer and fewer industries. But the Web3 will just keep getting the market share. Look at the market share of Uniswap versus all the other like DeFi protocols. And there are some great DeFi protocols, but most DeFi protocols are crap, scam, rock pools, etc. We do have Aave, Compound, Sushi, Swap, obviously Uniswap itself, but look at Uniswap, how much market share they gained. Look at Ethereum. Ethereum and Tron, 77% of the TVL. 77% of the TVL. Crazy. And that will just continue. And Solana, with all this marketing, gaining nothing. And it's not going to get anything. Despite all this marketing that they're doing, because they're not after the user, they're after the VCs. They're after dumping this shitcoins on the user. Okay. Mr. Adik is asking, how wallets like MetaMask, Tron, Phantom, Kepler are considered part of the Web3 ecosystem? So the short answer is some of the better wallets, such as MetaMask, so non-custodial wallets that do not require KYC, are considered to be Web3. Absolutely, Web3. So they are great tools. There are also some infrastructure plays, such as, say, Infra Alchemy, potentially QuickNode, but QuickNode is questionable for now. But because they're banning some geos, etc. So you want to be all-inclusive, like to the point where if you're not including somebody, like you as a company will go to jail. So ideally, you become as inclusive as possible, as permissionless as possible. So not just wallets, but also infra again, such as Infra Alchemy, who give you access to nodes. So you don't have to run your own node. You can just get access to the nodes. So MetaMask does something very similar. But still, despite the fact that MetaMasks are great tools and Infra Alchemy are great tools, ideally we should all be running our own nodes, which is very difficult. But that's the only way how we can move forward with this. That's the only way. The question that I've been discussing a lot, and let me put this on page instead of looking at my face. 1 second. Yeah, you guys see it, right? So the question that was in huge debate, still is in huge debate. It's 2024. There's no debate anymore. But this guy's still debating it. Why? Because they want to get VCs. My goodness. This one project, not gonna name the name. I was debating with the CEO directly. They raised $100 million last year. The market capitalization, therefore the valuation of this company, is $1.5 billion. I was debating with the CEO, UX versus security. Okay? What do you think is the answer? Which one should we go after, UX or security? And of course, the answer that we all want is let's go after both. But what if you have to make a decision? Maybe we can ask from you guys, from the whales, from the listeners. So are we gonna go after user experience, how easy it is to operate, or should we care about security? Like which one? If you select one, any ideas? And what will that entail, right? So the argument that CEO was going for is, listen, our users don't know anything about Web3, nothing. So we should improve the UX as much as possible. Why? Because this is a yes, yes, yes generation. Yes, yes, yes generation. They freaking, when they read the disclaimer, they just check all the boxes and say yes just to move forward. They don't even read the security policy or privacy policy, whatever. Okay, cool. So we gotta give them easy UX. And we're not gonna educate them because why should we? Let's just make it easy for them. But then the security, for security, we should probably help them. We should really, really help them, right? But not help them by educating them. We should help them by the tools. The tools should be secure. But these two things are illogical. You cannot have super good UX and also super good security at the same time. They just not, they're connected to each other, but they kind of go in parallel. The only way to really make a node in a decentralized community secure, the only way to get the security is through education. Through education. But we don't want to educate, right? That CEO says, fuck that. No, he says, we need to educate, of course. But at the same sentence, he's like, but we also should be doing such easy UXs that it's easy to play with everything. Massive contradiction. The project that person, that CEO was working on, by the way, got compromised, from what I know, at least 3 times. Not that the users were compromised on an individual level. The whole project was compromised at least 3 times, from what I know. And they're still at 1.5 billion market capitalization valuation as a private company, raised $100+ million last year. It's insane. It's absolutely fucking insane. And he knows that he's in the wrong. He absolutely knows. He feels it. He cannot turn back anymore because there are investors behind him, right? So the position is, of course, security comes first. And even if user experience is crap, who cares? Educate the user. Educate the user. And the user will get motivated. How? It's difficult for the user to get motivated when 1% of the net worth or less than that is allocated in crypto. Why would the user care about it? Let's assume there's a wallet with $5 on it, right? And that $5 is somewhere for somebody from the US or Europe. Because $5 in Africa is actually potentially interesting. Maybe in some emerging countries it's interesting. But with the level of inflation, $5 is not interesting. It's not as interesting as it used to be a couple of years ago. So if you're going to take $5 of the total, tokens, whatever, NFTs, everything in the wallet, of course the user is not going to care, right? But let's assume we move 90% of somebody's net worth, and we have users like this in the ghost whales. We have users like that. 90% of all the entire net worth. So you take real estate, stocks, bonds, crypto, 401ks like pension. You take everything. 90% of that is in crypto. You got to start educating yourself because now you are your own bank. Are you going to move your money to Coinbase and trust Coinbase with the funds? I doubt. If you do that, no offense, but you deserve to be fucking hacked, right? Why would you trust somebody with your money? Like, they gave you a tool. Blockchain is a tool to fully control your funds, to fully control your destiny. And you're saying, no. I want somebody else to control my destiny. Let me move this to Coinbase. You deserve to be fucking hacked. I'm sorry to say that, really, right? Or you go to somebody like Fireblocks, right? You deserve to get hacked. You absolutely fucking deserve that. But if you are at 90%, you're not 90% overnight. You first 1%, then 2%, 5%, 10% of your net worth is allocated in crypto. Okay, you're probably going to start educating yourself. Maybe you're going to, start reading on cybersecurity protocols of how you should be protecting yourself. There are books about it. These books are not complicated. I mean, some have difficult formulas, etc., but some are written in easy, plain English or the language of your choice, whatever, French, German, etc. Right? Maybe you're going to take like what we like to take. We like to take the security protocol of nuclear plants, right? Then you can also read the security protocol of Coca-Cola, right? There are two dudes who control the recipe. They never, um, take the same plane. They never in the same cab. Two separate guys, two keys, right? Then you could also look into what Vitalik is doing, how he is using smart contracts to protect his funds. Because smart contracts is an amazing wallet if used properly. Yeah, hire a developer or just create your own smart contract. Learn that. It's very. I know some ghost whales taught themselves how to code. Vitalik Buterin, of course, right? I'm not saying that you should go for these three in particular, nuclear plants, Coca-Cola, and Vitalik Buterin. I'm just saying that these are just some immediate examples that you're going to discover while learning about security protocols for your funds. And when you learn about security, do you care about user experience? Because you know everything, right? And we get it backwards. Fuck the user, fuck the educational component, fuck his security, because we need to have pretty user interfaces with cats on it. Because users love cats and also Coca-Cola and Mentos. Have it completely backwards, absolutely and that's what I'm seeing at these stupid conferences now. It's crazy. It's a disaster. It's a shame. Thank goodness projects like SushiSwap, Uniswap, Ethereum, Bitcoin exist. Olympus DAO, thank goodness. And we will try our best with Ghost to also lead the path towards Web3. And we have people in Wales, people in Ghost Wales, who still did not decide between Web 2.5, Web 3, and I'm seeing how they are realizing day after day, week after week, how Web 3 is really the only way going forward because they start asking themselves questions. Every single project they take, they ask now, is it Web 2.5 or Web 3? Before they didn't ask. But once we pose the question as black and white, you either decentralized or not. You cannot be semi-decentralized. You either decentralized, permissionless, or you're not. And when you start asking the question about every single project, you see. You just start seeing. Okay. That's this. Now, let's move to the next point. So I also had a chance to connect with a couple of chains. The chains I had access to, Arbitrum, spoke to them. We finally found, hopefully, the point person. So we're going to reach out and see if we could get any support. So far, Arbitrum, we didn't get any positives or negatives. We just didn't get any contacts whatsoever. So this time we got a contact finally. We spoke to our lovely Mint chain. We'll talk about this in a second as the Mint saga could potentially continue. Then we spoke to BEVM. That's an interesting one. Then, whom else we spoke to? We spoke to Avalanche. And I think there was one more. Let me check the Ghost Whales. Keep forgetting. 1 second. We also spoke to Neo. Yes, that is correct. So let's go one by one. We'll leave Mint to the end because that's the most difficult one. So Arbitrum, we just got a contact, right? So we just finally got a contact and we'll try to reach out. Good. BEVM, that's a Bitcoin EVM. So it's very questionable that the bridge between Bitcoin and EVM is decentralized. It's very complicated to do it. We have another chain very similar to this. I caught up with them earlier today. Neon chain. They were not at the conference. I just reached out. I know the guys personally. Still in anonymous fashion. So Neon is a bridge from Solana to EVM, right? So also not decentralized, but whatever. Now, this bridge here is between Bitcoin and EVM. Also not decentralized, but again, whatever. So what surprised me, these guys were extremely open when I said we have the deliverables such as, well, first of all, they had only a couple of guys. The brand gray, like literally gray colors, like nothing screaming. Kind of like them, like, heavy engineers who have no idea how to brand themselves. Typically a very good combination because typically they actually end up building some. So it seems like they're Singaporeans. They raised money there, very, very humble. And when I came, they had RWA, real world assets, as the most important trend that they are considering. The moment I came over and said, hey, listen, we're not doing RWA, we're doing Ghost Auction, we're doing Ghost NFT, more like NFTs, new standard between DeFi and NFTs. Would you, like, definitely has application to RWA, absolutely, directly right there. But, would you be interested? He's like, absolutely. What do you require? Like, no grants. He's like, oh, that's interesting, no grants. What do you want? Well, we just want marketing deliverables, right? All we're trying to get from Mint, tweets, retweets, articles, Galaxy company. He's like, that's it? I'm like, yeah. He's like, that's it? Really? I'm like, yeah. No, like, not a single chain gives this to us anywhere nowadays. He's like, really? So we'll try to see if this communication goes any further. But so far, the first reaction was very, very positive. I know some council members want to build a bridge. Maybe we can just integrate BEVM for that bridge. Who knows? Let's talk about it. Avalanche. So Avalanche never gave a shit about anything. And guess what? This time they also didn't give a flying fuck. I spoke to somebody who is the head of ecosystem Japan. He's like, I gotta connect you to the head of ecosystem. I'm like, okay, cool. Then we were passing by in the hall. The Japan lead called me and said, hey, that's the head of ecosystem. I'm like, okay, cool. So we shook hands and I started discussing like, hey, that's what we do. And this guy, the head of ecosystem, hey, I'm sorry, let's connect later. I need to go. As usual, don't give a flying fuck about anybody. Now, Neo was very interesting. So we spoke to the head of ecosystem about 3 years ago. I actually reached out to them via LinkedIn. They were not EVM precisely, but what I like about Neo humble team, and at some point of time they were called the killer of Ethereum. In I think maybe 18 or 19, they were the killer of Ethereum. Now you guys who came a little bit later never heard about this chain, probably. They still exist. So I spoke to this guy who the head of ecosystem or business development, whatever. Then I came over to the booth and said, hey, spoke to this guy before. And they identified the guy, which is rare. So it seems like the guy's still there. So it seems like the team is actually trying to do something. So they introduced a 20 million fund for all types of promotions. We connected. They also created a side chain which is completely EVM compatible, because the first kind of like when they were the Ethereum killer, they created some virtual machine which is not exactly EVM based. But now the sidechain version 2, which is EVM compatible, now it's fully compatible. Plus the 20 million funds. So now they're finally realizing that it's important, because when I spoke 3 years ago with this guy, I'm like, hey, listen, we may potentially need a grant, maybe 10K, 20K, 25K, 50K to integrate with you guys because you're not EVM exactly. He's like, no, we don't have the money. I'm like, but your market capitalization is $3 billion. He's like, yeah, it is $3 billion, but we don't have the money for any developers. I'm like, okay. Well, 3 years later, they woke up, 20 million, we'll see. So that's an interesting connection. Maybe we'll deploy on Neo as well. Okay, Mint. So Mint did not understand what was going on at all. Zero. I showed them the group chat. I said, hey, listen, what's up? These people who were at the booth were actually also in the Telegram group with me. So it seems like they completely don't understand what the fuck is happening. Zero. Initially, the first guy, the business development guy who reached out, he studied our project, and I liked it a lot. But nobody else studied the project, it seems like, and somebody named Kobe really knows his stuff, I think. But the rest of the people, it seems I have no idea what's going on. Zero. So they're asking questions such as, oh, like, do you guys have incentives? I'm like, yes, we do have incentives, JMB tokens. They said, well, but for Galaxy campaigns, we need incentives. I'm like, yes, we do have them, JMB tokens. How they earn them? I'm like, that's on-chain, this automated on-chain referral system. But how does it work? I'm like, well, maybe we should do a demo, etc. So there's lots of miscommunication, misunderstanding. We did reconvene. They messaged everybody right away when I was talking to them immediately. So they scheduled a call actually for today, in 30 minutes, but I'm a little bit busy in 30 minutes, so I rescheduled for Thursday. The whole point for the Thursday call is to essentially schedule a 45-minute conversation for us to showcase everything: Ghost Airdrop, Ghost NFT, and Ghost auction, and how they are integrated together. And while talking, I realized how genius our dev team is, because they are fucking genius. And Cosmos, who is also has been significantly involved, is actually his idea to Ghost auction. How elegantly everything is integrated, how everything is thought through, was crazy. It was amazing. And it seems like it's so rare that the main team just does not believe that it's possible, because they were asking questions implying that no other project would ever like even get to that point, and we already had it 3 months ago or 2 months ago, whenever we launched Ghost Auction as an engineering launch. Again, Ghost Auction is already live and mint. Let's hope that on Thursday something changes, and if nothing changes, too bad, because I reconnected with Neon, and at this point of time, to be honest, I'll probably get a reconnect with Lunia, and we just probably gonna select one of these two for the Ghost Auction launch, because at this point of time, it's a fucking shame that this one chain cannot give us any good core marketing. So that's the updates on the chains. If you guys have any questions, please go. Or questions, feedback, concerns, opinions. Let's take a quick pause right now, like a minute or something. And while we're doing that, I'll prepare for the most important point of the conversation. Also had some feedback. So put your questions in the chat, feedback, opinions. Would be great to hear. Okay. So it seems like for now it's a little bit quiet. It's fine. Let's discuss the last point. So the last point is coming from the fact that the space is getting more centralized, which is bizarre, because we do have a potential to be decentralized, but nobody cares about the user. Everybody wants to raise money, and it seems to me that this is just a government-oriented approach where the government, through grants, gives money to VCs. VCs give money to Web 2.5s, Web 2.5 skill, Web 3. Case closed. Amazing. That's how the revolution can die, but it's not going to die. That's the problem. However, a couple of products, a couple of ideas we've been thinking regarding the future of the product suite of Ghost, right? So let's just recap what we have. So obviously we have a Ghost chain, working on that. Some issues here and there, but we are going to be there super soon. So that's the Ghost chain itself. From day to day, we're going to launch the first testnet. Then we have Ghost DAO, which is a decentralized central bank of the Ghost ecosystem. Then we have Ghost NFT, which is powered by a standard where DeFi and NFT are met together, and they're going to be interconnected with the Ghost DAO. Then we have Ghost Airdrop, which is the first. One second. Let me just rewrite it. Which is the first true application on chain of the EVM 721 NBS standard right there. Then we have Ghost Auction, whose goal is to optimize for TVL and also implement the standard of the ERC 721, and the percentage of the proceeds will go towards Ghost DAO. Right? So that's what we have. That's the product suite. We also have some off-chain, which is Ghost airdrop bot. That's purely off-chain for now, but that's what's happening. Okay, cool. The idea is to potentially consider other products as well. And some of these products, it seems like you guys as whales love, and some council members love them as well. So I'll just put them out there. I'll put quick descriptions of how that could be done. And then I would need to ask you questions. And if you don't have questions, we'll just finish earlier. But if you do have questions, specific questions, I'll be responding to them. And I just want to see what resonates with you guys. So, product number 1, Ghost Message. Right? So with Telegram, despite the fact that we love Telegram, Telegram is a great system. Now there are some rumors that maybe the founder is connected to the Russian government. There are some peculiar details. Telegram was banned in Russia, then the guy went to Russia, and then magically Telegram got unbanned, and then magically the founder found the money to pay off the SEC, all around the same time. And then they, for some reason, flew to Azerbaijan, where the founder of the Telegram and also the president were located in that same country at the same time. And maybe tone or something like tone will be used for the BRICS to avoid sanctions and stuff like that. These are the rumors. So still a great product, way better than WhatsApp or other messengers, but definitely have some issues, definitely have some concerns. Let's go. So how about we create something which is actually truly decentralized and specifically works like a Bloomberg terminal. So if you guys are familiar, those of you who worked on Wall Street, or those of you who were connected to Wall Street at some point of time, so what the Bloomberg terminal has is, first of all, it's a subscription-based model. You pay, I think, $25,000 a year for one Bloomberg terminal. That's a subscription. What you get a special keyboard, which looks very cool. And then that special keyboard is connected to this, whatever, monitor right there. And then the special keyboard, like with special, weird, like colorful, whatever keys, gives you certain commands. And using these commands, you can operate the user interface on your monitor. You can get different charts and you can get different statistics. But most people think that most people think that Bloomberg, the whole point is the statistic. The statistics, the ability to build beautiful charts and all that fun stuff, like get revenue for the company, profit, whatever. But we believe that the most important feature of this Bloomberg chat is right there. It's right there, it's in blue. It's a Bloomberg chat. It's part of the Bloomberg terminal. And the chat connects everybody who has Bloomberg. And that's the beautiful part, right? So if you have Bloomberg in the US and then in Europe and in Asia, you are connected. You can message anybody on Bloomberg. And lots of OTC transactions, OTC, over the counter, those that don't have a single specific market, like the market is fragmented to the point where it has to be done over the phone. So the trades are not public. Like almost every single housing transaction is OTC, over the counter. So you call the buyer and the seller. The buyers and the sellers essentially conduct the transaction together. So lots of securities are not, not structured. So you have some futures, you have definitely some stocks, but you have they're called exotic derivatives. You have some crazy bond offerings, multi-billion dollars. You have some type of swaps, whether it's equity swaps or fixed income swaps, also foreign exchange swaps, which are crazy in size. And while the stock market sounds very big to you, but when it comes down to the actual derivatives market, the derivatives market at this point of time, just to put everything in perspective, the GDP of the world is around $95 trillion per year. Now, the overall exposure to derivatives globally, last time I checked, that was almost a year ago, by the BIS, Bank of International Settlements, I think. is $450 trillion. Those are derivatives, and lots of these derivatives are completely OTC. 450 trillion, so 5 times almost than the GDP. And now this number could be larger. And those 450 trillion contain swaps, options, futures, and not all of those are traded as a structured product. Lots of those are essentially single copy type of offerings that exist for one buyer and one seller, and other sellers don't even know about the existence. Other buyers don't even know about the existence of this specific offering. And how these offers are being conducted, they're being conducted especially through the Bloomberg chat. Just to give you an idea of the power of this little feature that we believe was the biggest reason behind the success of Bloomberg. So what we're thinking of doing, let me just erase it all if I could. So what we're thinking of doing is we're thinking of doing something similar, but for the Ghost ecosystem. So when it comes down to Ghost chain, so let's assume this is a validator, this is a validator, this is a validator. Now this one is not a full validator, but let's assume they are a nominator. Now this one here is part of the council. This one is part of the council. And then we have other roles. They're not just 3 roles, we have a lot of roles there. The roles will depend on the rank, very similar to how they depend on the rank now with the NFTs, with JMLs. Now, only these actors have access to the chat. And the chat is IPFS based. So while we do have a layer of essentially the network itself, right? So like these actors are interconnected. Like let's assume these purple lines right there, purple lines, right? So these purple lines are the network. Okay. But the thing is, if there is some random users who just have a wallet, like a light node, then they are also part of the network through the purple line in a way. But they will not be, but the yellow boxes who are just users, they will not be part of the more exclusive chat system, which is only exclusive for those who are more heavily involved. And the thing is, it's permissionless. So any user can easily become part of this chat, no problem. And the chat is two-sided, right? So, person 1 can talk to person 2. Person 2 can talk to person 3. The chats could be, the chats at this point of time could be easily, erasable, right? So you can the messages could be just, disappearing at some point of time or not. Those are some features we could be thinking about. But these transactions could also be on chain, or they could be just under IPFS. So those are some considerations, but overall, nobody can go ahead and arrest the founder, arrest the team member, and expect the chat to all of a sudden stop functioning. Right? Because it's fully decentralized and it's maintained by the validators. What do you guys think about this idea? So that's the first idea, ghost message. Again, just thoughts. If you don't have ideas now, just something to consider to be introduced in the ghost whales. And essentially just, throw your ideas there. But this is something we would like to, at some point of time, pitch to the council at large. We pitched this to a couple of council members. Some of our council members have very strong experience in privacy messengers and very big success with privacy messengers before. But this one could be decentralized. Okay, so that's the first one. Mr. IDK sense makes sense. At least somebody said. Thank you, Mr. IDK. Thank you so much for your support. I see your messages. Maybe I'll be able to respond to them in Ghost Whale separately later, just not to interrupt the flow. But let's move on. So that's the first product. Another product we're thinking that we also got some interesting feedback from you guys is ghostStable. So ghostStable has been there for quite some time. as an idea. So that's a stablecoin by Ghost. So let me tell you how Maker works. I did describe how Maker works, MakerDAO works in one of the previous calls, but let me just do this quickly one more time. So I want to put 50, 100 like dollars in ETH, right? So I'm user one. I'm user one. I want to send this ETH. I send it to a smart contract, and I get back $1,000 worth of DAI. So that's how this works. Now, once I return the 1,000 DAI, I get back my collateral of 1.5 or $1,500 in ETH. Now, the reason why I would do that is because what I could do with this that's kind of the whole point is I can then user one still, right? I can then go ahead and use this DAI. I can go to the DEX, Uniswap. I can send 1,000 DAI here, and I can get more ETH. Like I gotta get what? Like $1,000 worth of ETH. So what I just did, I just leveraged myself on chain. So I put 1.5 ETH and I got another 1,000 ETH. So I'm 66% leveraged. It's not 100x, but it's something. So if I think that ETH is going to grow, that's good for me, right? Because I can get on-chain leverage, which is cheap. It's pretty much zero interest. As long as, well, if I take the risk, if the price keeps going. But of course, if it keeps dropping, it keeps dropping. But this is the beautiful part. That's why it was so fucking cool. That's MakerDAO model. Why do they want to change this to Sky? I think the answer is VC investors. And you know kind of my position on that. Now, what could be done here? Well, okay, we do have ETH. That's cool. But can we just replace ETH with Ghost? And I'm talking about Ghost token on the EVM chain. And here, same thing. Instead of ETH, it's Ghost. So users, if there's ghostStable, users essentially could take leverage to purchase more Ghost. And you will see once we launch GhostDAO, you guys will see how amazing this is from perspective of like why the users would want to be leveraged to purchase it. Because it's crazy. It's the upside, potential upside is just insane. It's absolutely freaking insane. Again, it's not a security token, it's a utility token, but this way how smart contract is structured, how it's utilized in the upside of the curve by the DEXs, it's just impressive. It's just absolutely impressive. It creates this positive loop. It also creates the negative loop simultaneously. So it's both ways. But when it's positive loop, it's insane how fastly it grows as far as market capitalization and essentially TVL for that specific treasury on that specific EVM. So essentially we could do something very similar where the, here like the Ghost token is used as a collateral, and instead of DAI, you get ghostStable. So GSTT, I don't know. Oh, sorry, not GSTT. GS Ghost ST, ghostStable. You see, like even it's amazing how it's already there. We can maybe even call it GH stable. I don't know, something cool like that. I don't know. So we can even call it ghostStable. Oh my goodness, that's so cool. Yeah, Cosmos, ghostStable. I'm smart. Look at me, so smart. ghostStable. So ghostStable, ghostStable, whatever. That's a stable token. Stable coin, therefore, same match to $1, and then it's backed by the Ghost token. So similar idea to MakerDAO, just different tokens, and they do perfectly make sense as far as this mechanic. Of course, there's a little bit more with MakerDAO. There's a token MKR, which is essentially a governance token for us. Instead of MKR, we can use the Ghost token itself because it's already serving as a governance token, right? Or maybe we're gonna use something else. Maybe we're gonna use pGhost as that, right? As MKR. So that's like we didn't figure out the tokenomics in full yet, but this is something that we could figure out first and also launch that. Something that would be interesting to be pitched to the council as well. So any questions, any concerns, any feedbacks here, any opinions on the ghostStable overall? So while you guys are thinking, because there's a little bit of delay with YouTube, let me get to the final one. We'll wrap this up very, very, very fast. Next 5 minutes. So the final one is actually a recent one. It may take maybe more than 5 minutes, but I'll try to be fast. So let me quickly describe. So the third one is called like mirror swap. We described it as well, but now we have a different angle. And this could be extremely interesting to those of you guys. Ghost whales have access to some shitcoins. And I know some of you do. That could be impressive. So let me just describe how GhostDAO works really quickly. So in the GhostDAO ecosystem, I pay DAI as a user to the smart contract, and I get eGhost. Then I send eGhost, and I get sGhost. Then I send sGhost, and I receive as a user Ghost token. So that's me as a user. Let me see if you guys see the whole thing. Yeah. Let's just move it a little bit lower. Okay. Now, what you could do is here, you can purchase eGhost not with just DAI. You can also purchase this with LP tokens. So LP tokens are when you go to a DEX and you deposit both DAI and eGhost into a liquidity pair, you start earning LP tokens, and LP tokens essentially give you access to the DEX fees. So anybody who trades DAI and eGhost, you get 0.3% because you provide liquidity for DAI and eGhost. So you take risk, and in exchange for the risk, you're getting 0.3% of the fees. And that's how this works. Now, that LP, which is generating fees, DEX fees, you can deposit in exchange for DAI. Why would you do that? Because instead of eGhost, you're going to get more eGhost. So essentially, you're going to buy eGhost at a premium. So you're not going to get one eGhost, but instead you're going to say get 1.5 eGhost. So that's how this works, right? So that's GhostDAO. Now, why would GhostDAO do that? Why would it give more eGhost? Because now it's the GhostDAO treasury that gets the LP. And it gets to the point where the LP turns into POL, protocol owned liquidity. At some point of time, using these mechanics, 90% of all the LPs belong to the GhostDAO treasury. So now the GhostDAO treasury, right there, this one, smart contract, starts earning 0.3% on any trading of eGhost and DAI. And that is how this treasury starts being sustainable by itself. It just starts generating never-ending returns. Consistent. That's the genius. Olympus DAO people are freaking geniuses. We got inspired by them, built something similar, but again, the inspiration is directly from the Olympus DAO. Super smart idea. Now, that's what's happening with the existing situation, eGhost and DAI. Let's now turn this to a new idea of the mirror swap. So originally we had some like mirror swap ideas. We probably run this by you guys. Instead of repeating, let me just give a new angle. So let's assume that there's a shitcoin. This shitcoin is XYZ. It doesn't trade much. Maybe it has a market cap of $5,000. Maybe it has a market cap, not price, market cap. Maybe it has a market cap of $10 million. But it maybe trades like that's the market cap, M cap, right? Now the volume on the day, maybe it's $100 here, maybe the volume here is $5, right? Like you will see examples. 10 million market cap, $5 trading volume. Like it doesn't trade at all. What we could do is we could go to these projects because this project kind of dying, and everybody knows that they're dying. I mean, there are some hypers and who bought into the hopium, but at the end of the day, everybody knows that this project is fucking dead in the next year. They will not exist. We'll say, listen, you guys, of course, didn't do any tokenomics, right? Nobody wants to do tokenomics. When we talk sometimes to this project and say, hey, we can help with tokenomics. They say, no, our tokenomics is great. But typically, tokenomics is just the definition of tokenomics from their perspective is how much allocation needs to be going to the team, to the treasury, to market making, and of course, it's all 90%, and 10% goes to the community. It's always like that. That's how they describe tokenomics. In reality, tokenomics is the ecosystem, right? So the actors and the actions that these actors are performing, conducting on the ecosystem. So of course, there's no staking. In most cases, all the staking is unsustainable. What we could do is say this, guys, you have the XYZ token, great. How about how about we, as ghostDAO, give you an ability to stake your token? So what happens is you have 1,000 XYZ tokens. And now if you stake them with Ghost, you can start earning GMV tokens. So this is called farming. So staking is you stake XYZ tokens to earn XYZ tokens. Farming is you stake XYZ tokens to earn GMV tokens. So this is farming. Right? So we introduce farming to them, to any project. And of course, based on some mathematical formulas, we design exactly how much staking, how much farming rewards will these projects receive based on the market cap, based on the volume, based on the community size, based on the proportion of the tokens that actually got staked, farmed with Ghost. Why would we do that? Because now they have to lock in their XYZ tokens. When they lock it, they have to lock it specifically into the smart contract. And while we're not going to get 90% plus POL, we could get 10% plus POL, for example, protocol owned liquidity, 10% of that specific token, of the XYZ token. And now we can generate 0.3% of the 10%. And all of that goes to the ghostDAO. So the more partnerships we make with these XYZ projects, the better. And of course, we can introduce some referral rewards for you guys who bring these projects, like maybe 10% of the gains goes to whoever brought the project in, whether it's GMV tokens rewards or the actual 0.3%, like essentially P-Ghost. So whether it's P-Ghost or GMV. So that's we're still thinking about, we're still considering it. But overall, imagine we have project XYZ, we make 0.3% on the 10%, ABC, we make 0.3% on the 10%, then we have project GEF, we make 10% on the 10%, etc. So we have all these like hundreds, thousands of projects who farm GMV, and what we got their community or portion of their community who engaged, who love to run nodes, who love the concept of Web3, who finally have a chance to do something with their shitcoins because their shitcoins are dying. So not only going to get the community, but we also going to get the POL rewards that will all be fed into ghostDAO. And now that could also be integrated simultaneously with the Dpin game that one of the council members wants to suggest, very similar to Catizone or very similar to Hamster Combat or very similar to Toncoin, etc. So maybe you can integrate these two ideas together. And Mr. IDK, great question. What happens if the shitcoin goes away? Well, that's the whole point. If it goes away, it goes away. But what does it mean to go away? It cannot go away because the supply got already minted and it's indefinitely exist on the chain. So it cannot just disappear. What can disappear is the price. The price can not disappear, but more like approach zero, even closer. That's the worst that can happen. But the supply of the shitcoins is always on chain. So there's little you can do. The only way to kind of remove the supply is to send it to the so-called zero address on Ethereum by burning it. But it still will be on chain. It's just that balance will exist on that specific address, and that specific address assumes that all the balances under that address are burned, don't exist, although they still exist there. So any token that is minted is there forever. We just need to be vetting these projects more carefully, and most importantly, vetting the communities. So what's going to happen is Cosmos is going to start reaching out. A couple of guys going to start reaching out to some projects, and we'll see how active these communities will be. But huge request for you guys, if you have access to shitcoins or maybe you own shitcoins yourselves, tell us, right? Tell us in PM or tell us in the Ghost Whales community, and let's organize calls, because we have access to at least 5 shitcoins at the moment, which are pretty big in community, like very big. And we would like to expand that to 100. So the more projects we can do, the better. And that's how we could revive these shitcoins while also significantly helping the Ghost ecosystem. Jason, thanks a lot for the presentation. It's super rich. Unfortunately, there's a cut here. Okay, guys, I think we need to pause. Thank you so much. See you next week.